In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning trades first like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So today, we'll be taking a look at gold, crude oil, US500, which is S&P 500, US30, which is Dow Jones, GBP-USD, and EUR-USD. So whichever chart you're interested in taking a look at, you can use the timestamp below to navigate through this video, right? So as usual, we're starting with the gold chart. So on my screen here, you can see the gold chart on a 1 hour time frame. So last we talked about the possibility of price having some sort of pullback and consolidating before we see further move to the upside, and that's exactly what happened. Right now, we can see a symmetrical triangle being formed. But this seems more like a falling wedge, right? A descending wedge with price creating lower lows, lower highs, and you can see the conjunction here between these two trend lines. So on Friday we had a good breakout, which seemed to, have led to a good bullish trade opportunity for you to go long. I'm currently long on this trade, so if you're not in, I think now is a good opportunity to go long when market opens, right? Because I do think this is going to go higher eventually, so approximately maybe 300 500 pips. So if you have a good risk management, current price levels, it's a good level to get in because we're currently trading at a new highs. You can see a low, we made a higher low, we had a high here, now we've made a higher high. So all that's left for us to do to keep climbing higher is to take out these highs. So if you go into a trade right now, when the market opens, your stop loss would have to be underneath these lows that led to the breakout from this chart pattern, right? So while you do that, something to pay attention to is that we may also get some sort of pullback, right? Because there's a good chance the market opens and we just get a pullback to the downside, and another one, more consolidation before we eventually go higher, right? So this is something that could happen, totally possible, and I think this is also going to give us good opportunities to go long if you are not currently in on this trade. So if you want to be patient enough to see what happens, then this is something you could pay attention to look for good trade opportunities on gold, right? So if this happens, then the pattern we'll be looking at would be something like this, right? So this would be a much more realistic chart pattern or pathway that gold is likely going to take before going higher. So there's a good chance we get a little bump to the upside, get a pullback, consolidation, go up, give us a longer term consolidation before we eventually get a bullish breakout before we go higher, right? So similar to what we saw over here. So remember, price action is simply the study of past price movement in order to make future price predictions, right? So we had this move to the upside and we had a good consolidation over here before we went higher. So there's a good chance similar structure or similar pattern is going to happen here. We go up, consolidate a little before we go higher, right? So this is something that could happen totally. Right now, there's no reason for me to be bearish on gold, so I don't see any reason why anyone wants to go short. So the only reason why I'm on a long position right now is because I'm taking a look at the current immediate pattern, right, following the chart as the price action evolves. So that's the reason why I did this, kind of like a symmetrical triangle. We had a good breakout and I went long. So I'm long on this trade. My stop loss is currently on this price level. Even if we do get the second case scenario I just explained, we get consolidation, it hits my stop loss, I'm going to take my losses and wait for the next trade opportunity, right? So I'm trading with a very good risk management. That's the reason I'm able to get into this trade, and it aligns with my overall trading strategy. But if this is not for you, you prefer to be more conservative, because I'm an aggressive trader, right? If you prefer to be more conservative, which is actually good to help you mitigate risks when you take your trades, then, or perhaps you have a small trading account balance, right? Then waiting for the second case scenario, which is this consolidation, more consolidation before we go higher, would be another opportunity to go long. So this would be a much better opportunity, better confirmation to go long on this on gold before entering this trade, right? Instead of going long right now, excuse me. So this will be a better trade opportunity in my opinion, because then you have bigger consolidation, better confirmation, which means price likely going to go higher for longer. So the bigger the consolidation, the bigger the massive moves that comes afterwards when we get our breakout. So right now I'm currently long. I'm not going to be waiting for this conservative approach before I go long, before I get in the trade. I'm already long. If it hits my stop loss, I'm going to take my losses, then wait to see what the market does before I try again, right? That's because I have a good trading account balance, I have a good risk management, and it aligns with my overall trading strategy. So if that's for you, you can go long, set appropriate stop loss, good risk management, watch the market as trade evolves. So for now, I'm not talking about any bearish case scenario, but for the sake of those who, will want to think about, okay, what happens if we eventually go short? So this is something you could watch out for. You could take this trend line like this, right? So this is clearly some lows, higher lows. So to go short, I would be watching out for a price movement like this to the downside, consolidation followed by a bearish breakout. So if this happens, then this could be a good opportunity for you to go short, aiming for this larger trend line at the bottom where you look to take profit, right? Because this trend line would eventually align with this area of resistance, right? So this is a good opportunity to go short for those who are looking forward to go short, and this price level will be an opportunity for you to take profit if this happens. Personally, I wouldn't be going short because there's a good chance we come here, this could lead to another higher lows and see price ripping higher, so like this. So instead of getting a breakout and a bearish breakout, we get a bullish move to the upside. So this is something that could totally happen. So that's it briefly for gold. If you're interested in following my approaches, leave your thoughts in the comment section. If you disagree with me, share your thoughts in our Discord community using the link in the description below. Moving on, we're talking about crude oil. So crude oil, real quick, please mind me talking really fast right now because I want to get over with this video as fast as I can. Okay, if you have questions, please use the comment section to ask your questions, right? So this is the crude oil chart on the 1 hour time frame. As you can see, we are currently trading within a channel, right? Two things are likely going to happen. We're either going to go up or we're going to go low, right? So bullish case scenario is waiting for price to break out from the current price. Okay, just excuse me, I'm going to draw this again. Bullish case scenario will be waiting for price to break out from this area of value. So if this happens, then your entry could be at a breakout from this descending channel, also this area of value. Stop loss obviously is going to be underneath the consolidation, at least at the breakout, or underneath these lows. Your first take profit target can be around these highs. Second take profit target can be around these highs, and this is how I'm going to treat crude oil as the price evolves, right? So I'm currently keeping my eye on this. This is something I'm inclined to getting on board with if we do get that bullish breakout to the upside. I'm going to be very patient because we're currently trading around an area of value which aligns with the resistance level of the descending channel, right? So this is totally how I'm going to trade a long position right now on crude oil. Mind you, I'm not in this trade yet, but I'm looking at this really closely this week for an opportunity to go long. So that's the bullish case scenario. For the bearish case scenario, I guess you already know what that's going to look like. I'm simply going to wait for a reversal to the downside, right? Consolidation on a little, and then a bearish breakout to the downside. So if we do get this, entry is going to be around a breakout from a trend line. Stop loss is going to be above the consolidation, at least to the breakout, and my take profit is going to be around the support level of the descending channel, or it's going to be around this area of value. So this is an area of value going to the 4 hours time frame, so you can see what I'm talking about. So this is a clear area of value because it's a good support level where we had multiple price rejections and one over here. So there's a good chance take profit level could be at these price levels if we do get here, right? So going back to the 1 hour time frame, just so you can clearly see what I'm talking about. So this is a channel. Bullish case scenario is waiting for price to break out from the resistance level of the channel and also taking out this area of value. First target here, second target here, right? Bearish case scenario is waiting for a reversal, consolidation a little, and taking out this trend line here. So this is a trend line within the descending channel. So when this happens, short position over here after the breakout, stop loss is going to be above the consolidation, at least to the breakout, or above these highs to be safe. Take profit is going to be at the support level of the channel or this area of value over here. That's it briefly for crude oil. If you have questions, leave your thoughts in the comment section down below, or use the link in the description below to join our Discord community and leave your questions there, right? Moving on, we'll be talking about US500 really quick. US500 right now seems to be in a very solid bullish market structure, right? So bullish market structure, price creating higher highs, higher lows. And if you take this lows here, for example, you take this, it seems like we had a good breakout from this trend line and had a good retest, right? So it feels like we're likely going to go down all the way to these price levels, maybe all the way to these price levels before we eventually see price going higher. This is totally possible, so I'm going to share with you my bullish and bearish case scenario right now. Okay, so first bullish case scenario, mind you, this is a 2 hours time frame. First bullish case scenario is waiting for price to come into this area of value, consolidate a little and give me some sort of confirmation of a reversal. Then I'm going to go long, right? So my entry is going to be at the bounce, confirmation of a reversal. Stop loss is going to be underneath these price levels, right? So this gives you a tighter risk to reward ratio on this trade. Obviously, take profit target is going to be around this resistance level. So that's my first bullish case scenario, right? So if this doesn't play out as I expect, then I'm going to look forward to the bearish case scenario, which is price coming down here, consolidating a little. When I don't get a confirmation of a bullish breakout, but I do get a breakout to the downside, then I'm going to go short, right? So when I go short here, stop loss is going to be above the consolidation, at least of the breakout. Our target obviously is going to be around this area of value, right? So this is how I'm going to trade US500 for a bullish case scenario and a bearish case scenario. So if I take the short and I come into this price level, then I'm going to look for another bullish case scenario, right? Meaning I'm going to wait for a bounce, confirmation of a reversal, then go long to go higher. So entry is going to be around the confirmation of a breakout. Stop loss is going to be underneath the retest. First take profit target is going to be around this area of value, so around this place. And second take profit target is going to be obviously around its highs. This is how I'm going to trade US500. Obviously, there's an opportunity or there's a possibility that price could get into this area of value, consolidate a little, and also give us a bearish breakout to the downside. If this happens, then you guessed it, I'm going to go short again over here. Entry is going to be a stop loss is going to be above the consolidation leads to the breakout, and target is going to be obviously at around this area of value. So we have another area of support over here, right? Then when we get here, I'm going to look for another opportunity to go long, bounce, confirmation of a reversal up. So I'm going to watch out for both case scenario as we get into this area of values, right? So first area of value over here, I'm going to watch to see what market does. Are we getting a reversal to the upside, or are we breaking out? Whichever plays out, whichever I get my confirmations on, I'm going to go either long or short. Then wait, price gets into this area of value. Are we going long or are we going short? I get my confirmation for a bullish case scenario, I go long. I get confirmation for a bearish case scenario, I go short, right? Then I wait for price to get to this area of value again, and watch out for a bullish case scenario, bearish case scenario. So it's a no-brainer, right? So you see the chart, you see how it's setting up itself, and you trade accordingly, right? You don't need to think too much about it. It's just simple, technical analysis 101, right? Price getting to an area of value, you look for the bullish case scenario and the bearish case scenario. So in this case, we are currently in a bullish trend. So you should understand that the bulls are likely going to be at a much more advantage here compared to the bears, right? So you can also do this. Take this trend line right like this. So you would see that obviously we took out this. We've not broken this trend line yet, right? So just because we break this trend line doesn't mean price is just going to keep going lower. Okay, so I'm going to give you an example. So just in case price closes below this trend line, doesn't mean you should go short immediately, right? Because we have this area of value to contend with. So you have to watch to see how price reacts to this area of value. If it takes out this area of value, creating a lower low, then that will be your confirmation to go short, in line with the break of this trend line and in line with the break of this area of value, which is currently an area of support, right? Then you watch out for this level, and moving on, watch out for this level. That's it briefly for US500. I hope it was clear enough. If you have questions, once again, leave your thoughts in the comment section down below. Moving on, we'll be talking about US30. So US30, similar to what we have on NASDAQ, similar price structure, price levels. You can see what happened over here. Price came down out of this level. We took a good breakout. It came here, got a confirmation of a bullish move. We went up, came back down, consolidated, took out this area of value. So now we are heading for this area of value. So when we get here, Bullish case scenario, get here, wait for a consolidation and a confirmation of a bullish move, go long. So I'm going to go long at the confirmation of the reversal. Stop loss is going to be underneath the retest, obviously, and take profit target. First one is going to be around these price levels. Easy peasy. Okay, all you have to do is be patient, wait for your strategy and your setup to be confirmed before you either go long or go short. So that's the bullish case scenario. Bearish case scenario is waiting for price to get into this area of value, consolidating a little, and then getting a bearish breakout to the downside. So if this happens, I'm going to go short after the breakout. Stop loss is going to be above the consolidation that leads to the breakout. Take profit target. This one is tricky a little, but I'm just going to trail my position as we go lower. Maybe first take profit target is going to be here. Second one is going to be maybe around here. And third one is going to be around this area of value over here. That's over here. So this is what I'm watching out for on US30. Right? So remember, this is also still in a bullish trend. This is a 1 hour time frame at the moment, but this is still in a bullish trend. So bulls are more at an advantage on this chart than the bears. I know the chart is setting up to look bearish, but watch out for this area of values for possible bounces in continuation of the trend or possible breakouts in more decline on your US30, right, which will give you an opportunity to go short. That's briefly for US30. I hope this is clear enough. Once again, if you have questions, leave your thoughts in the comment section down below. So if you take a look at this chart or my past chart, you can see these dotted lines. So these dotted lines are alerts I set on the chart. So TradingView alerts me when price gets into this level, so I'm ready to take appropriate actions, right? Moving on, we'll be talking about GBP-USD. So GBP-USD, we talked about this last week, and I told you there's a possibility that we touch this trend line, and we did touch the trend line. I took a good trade on that. I closed around this price level, approximately 70 pips or so. I went in with a good lot size, very tight stop loss, which was a decent trade in my opinion. So right now, two things are likely going to happen. Okay, we are likely going to consolidate within this area of value, within this range, and then get a bullish breakout to the upside in continuation of this massive bullish trend, right? Currently, there's a bullish trend, higher highs, higher lows, 4 hours time frame. That's a bullish case scenario. So bearish case scenario would be price consolidating within its price levels and then giving us that bearish breakout to the downside, right? This is the bearish case scenario for GBP-USD. Either way, I'm going to wait for a proper breakout before I jump into either of these trades. So going down to the 2 hours time frame, so you can clearly see what's happening down here, right? So 2 hours time frame, for example, if you take a closer look, you would notice that we have a clearly defined area of resistance, right, going along this trend line. So I'm simply going to wait for price to probably maybe come down here, consolidate, then break out from this trend line before I go long, right? So if this happens, my entry is going to be immediately after the breakout. Stop loss is going to be underneath the consolidation at least of the breakout. Take profit target, obviously. First target is going to be around these highs. Second target is going to be around these highs. Third target is going to be around these highs. This is how I'm going to trade GBP-USD going long, right? Looks good, looks interesting. The moment we take out this trend resistance level, then I'm going to go long. I may go long heavily on this one, right? Because then it will mean we just bounced off this trend line. We just took out this significant area of value and we are gearing up in continuation of the trend, right? And this will be approximately, let's see, this will be approximately 430 pips. So let's just say 400 pips in total. So this is a decent trade opportunity for GBP-USD, and your stop loss will be approximately 60 pips. So this is an absolute solid trade for a good risk to reward ratio if it plays out as I just explained, right? So this is a bullish case scenario on GBP-USD. I wouldn't be going short even if we do get a bearish breakout. For those who would like to explore the short trade opportunity, that's simply going to look like this. Waiting for price to touch trend line, consolidate a little more, and then giving you that bearish breakout. So if this happens, then you want to go short after the breakout, right? Stop loss is going to be above the consolidation at least of the breakout, and your take profit target is going to be trailed as we go lower. because this is still technically a bullish trend and price could reverse at any time. But obviously your take profit target will want to be placed around this area of value. So here or here, right? That's your first major area of value, and you can trade the rest of positions as you go lower, as low as these lows, right? So this is how I'm going to trade GBP-USD for my bullish and bearish case scenario. If you agree with me, leave your thoughts in the comment section and telling me why you do agree with me. If you disagree, also leave your thought there, letting me know why you disagree. I'm sure we could both learn one or two from each other, right? Lastly, we'll be talking about EUR-USD. So the EUR-USD chart, similar to what we have on GBP-USD. On this one, I think I'm going to go long immediately we come closer to the trend line, just because it's going to give me a very tight risk to reward ratio, right? So if we come here, let's say we come close to this trend line, bounce a little, right? Then I'm going to go short immediately. So I'm going to go short around these price levels. The only reason why I'm doing this is because it's going to give me a very tight risk to reward ratio. So my stop loss is just going to be underneath these lows. So if you take a measured price movement, that will be approximately, it shouldn't be more than 50 pips. So this will be approximately 30 pips stop loss. Decent trade opportunity in my opinion, and I'm just going to go heavily long, aiming for approximately at least, let's say, 200 pips, right? So that will be a risk to reward ratio of 1 to 10 approximately. So if you're waiting for 300 pips price target, that will be a risk to reward ratio of 1 to 10. It's worth it in my opinion, like totally worth it, because this is a 4 hours chart, and zooming out, you can see the trend line takes the entire width of my screen, which means this trend line has been existing for more than a year now, right? Since October 3rd. So this is currently October 6th, right? October 26th, excuse me. So this is a no-brainer in my opinion. So when we come close to this trend line again, I'm just going to go long with a tight stop loss, hoping that we go higher. So that's one of those things. Sometimes you just take the risk and it works out. So if it doesn't work out, it hits my stop loss, it means probably going to go lower, or it's probably going to be a fake out, right? Either way, I wouldn't be going short on this one. I'm just showing you what I'll be doing on EUR-USD if we come closer to this trend line, which is I will be going long. So going out to 2 hours time frame, for example. So 2 hours time frame, or let's check 1 hour time frame. So 1 hour time frame, this is still the trend line we're talking about. Nothing has changed. So I'm simply going to wait for price to come as low as this price level, so I can get a tighter stop loss, as tight as possible. Entry is going to be underneath, around these lows. If we do get here, stop loss is going to be underneath these lows, right? So that will be around 30 pips. But right now I think I've lowered my entry, so this will approximately 20 pips. I'm just going to make my stop loss 30 pips approximately, and my take profit is going to be around 200 pips, not to be too greedy. So that's the approximately a ratio of 1 to 7 or 1 to 8. So that's how I'm going to trade EUR-USD, GBP-USD, US30, US500, crude oil, and gold this week. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you have questions, please use the comment section down below as well. I also have a link to our Discord community. It's totally free. Use the link to join our Discord, leave your thoughts, leave your questions. We have tons of members within our community who are ready to assist you however they can. So that's it from me, guys. See you next week.